and gentlemen, and welcome to another webinar with Axis Mutual Fund. We're here to talk to you about a new proposition from our fund house, and it's one that hits home with a lot of us millennials in today's day and age. Did you know there is a sector that has currently propelled India's service exports into a higher growth trajectory? You guessed it, it's the IT sector. India's ITs contribute about $194 billion in service-oriented exports, and it's helped India move out of from being a BPO leader, or rather the world's preferred BPO destination, to India becoming a leader in cutting-edge technology exports. To tell us more about this new offering, we have Shane Vaz on call today. Shane is an AVP at Axis Mutual Fund. He comes with a wealth of experience in product management. Before I hand it over to Shane, just a request to the ladies and gentlemen here. Please ensure you type in as many questions as possible. There is a question box on the player, and we'll trouble Shane with as many of them today. So without further ado, over to you, Shane.
Thanks, Siddhant, and good evening, ladies and gentlemen. Thanks for joining in. Uh, so we've got a very interesting proposition for you here today, and this, given what's happening in the markets, opportunistic as we are, we think that there is a good opportunity in the IT sector. To speak more about it, we will be highlighting a few slides from our NFO presentation. The fund has gone live. The NFO has gone live on the 27th of June and is open till the 11th of July. Uh, so, keeping that in mind, very happy to kind of present our offering called the Access Nifty IT Index Fund. It is, as you guessed it, it is an index fund. It is a passive offering, and the aim and objective of this is to participate in the story that is IT, and the resulting opportunities that persist. So I think the guys in marketing have done a good job in calling it unlocking the tech treasure. But if you were to look at what's happened, and there have been a lot of bearish sentiments, there are a lot of headwinds that have driven Indian IT downwards over the last year or so. So much so that people often tend to lose sight of the longer term picture, and this is the longer term picture for you. Globally, technology demand continues to remain a very strong sector, and this is despite the fact that there is an impending US recession. The chips are down in Japan, the chips are down in Europe, and much of the developed world and companies that operate therein are continuing to spend their way out of this recession. Technology more so spending is rather unique because if you look at the way most of these large companies spend technologically, you would notice that they're focusing on optimizing costs, that focusing on flexibility and to cater to an ever changing environment. Typically, in periods of recessions, depressions, and other challenges, you would notice that global companies reduce or manage their business operations by factoring or toggling between these three elements, that is, people, processes, and markets. Over the last year, a lot of the IT crowd was worried about job losses. Workforce management was the key buzzword, and even up until about March, April, May of this year, you heard a lot about that piece. Um, Another element is on markets. So whether you look at more consumer-facing sectors like, say, banking, or if you look at consumer discretionary, a lot of global behemoths are reconsidering, certain countries or certain market presences. The third and more critical element for us, specifically with the IT context, is processes. And processes play a very pivotal role both in terms of flexibility and cost, because let's face it, that is the biggest cost of any business, that is to operate, right? So if you look at this and this particular element, you would notice that during crunch periods of times, that is, so let's take examples over the last 25 years. you've got the great financial crisis, you've got the taper tantrum of 2013, you've got COVID. In all of these periods of time, you actually saw technology demand outstripping supply, and that is why the last year, even though it was bad for stock market investors of IT companies, it was a great year for IT companies because they posted record profits. Even as we speak, and first quarter results will be out over the course of the next month. But what we are noticing is that Indian IT companies have actually had a steady increase in annual contracts that have been either reissued or they've won fresh contracts, which means to say that yeah, while the chips may be down at this point in time, maybe it poses as a good opportunity for investors to participate from a medium to long term view. Another element that we must start factoring in is Indian IT is no longer just the back office of the world. It is now slowly getting into middle office, which means that a technology or a software that is being developed by the big five, that is Google, Alphabet, or Meta, or Microsoft, all of these are great products by themselves and can be used in a variety of mediums. But there needs to be someone who goes and implements this. You would not go into a original equipment manufacturer expecting them to deploy it for you. They will in turn have contracts with companies like the Infosys of the world or the TCSs of the world, who would then solution it or bundle it to provide the best alternatives or options. And that is what is driving incremental business for a lot of these companies. So you've got the cloud computing, you've got hyperscale, you've got Workday, you've got SaaS, you've got a variety of these platforms that are now being optimized by Indian IT companies to deliver superfluous value to a lot of non-IT related companies. And that is very reflective in financial terms for companies like, say, that. So we're using TCS and Infosys as bellwethers here because they are reflective of the larger Indian IT universe. And even in the Axis Nifty IT Index Fund, which will replicate the the Nifty IT, they account for a largish portion of the portfolio. So using that analogy, you also must factor in what is happening with their business stream. Their business model today is incrementally improving towards that digital element. That means two things. One is that they're more efficient, and B, they're more profitable. All of this is all good in terms of capabilities that a lot of these companies are developing, but we also should look at it from a customer facing point of view. Globally, the Fortune 1000 companies that were polled by HFS Research, which is one of the largest research spaces in this industry, has highlighted that Indian IT company not only can execute fairly well, they execute at scale, they execute with talent, they execute at creating a very, very good ecosystem, and they execute with novelty. And that is what sets them apart from the entire global landscape. Uh, for the longest point of time, Indian IT was benchmarked to Accenture, which is a US based company. Not anymore, because today you've got benchmarks that are set by Indian companies themselves. So whether it is Infosys in, say, a government contract, for example, or TCS in a banking contract, or a Wipro in a similar stream, each of them have created and spent and invested very, very heavily in capabilities and solution orienting services that have made them add value to long-term customers, and that is being recognized globally. What this reflects in is more and more reliance on Indian IT companies. So if you were to look at how Indian IT companies are gaining market share, it's been a very steady stream. So I mean, there's about 18 years worth of data on this slide, and you see there's one standard element, that is the Indian IT companies gaining year after year market share. And this is not only low cost or low value orders; it is also the high value or the medium value contracts. And that is what brings us to why IT now. Like I mentioned to you in my opening comments, IT for IT investors, a period of pain is historically been seen as an opportune time because globally they win more orders, and as the orders reach gestational stages, they tend to deliver for many of these IT companies. We are at one such similar situation. So fast forward or rewind to 2020, you had the COVID pandemic. And at that point in time, a lot of people lost their jobs. A lot of people had difficulties at home, and Indian IT companies stepped in, or global IT companies also stepped in to kind of create create technologies, create solutions to create a very very flexible working environment. Today, if you look at it across the world, a larger proportion of people are not coming back to the offices. That is why you see commercial real estate recovering at a very, very slow pace globally. Why is that happening? Because today you've got the ability of mobility, you've got the ability of flexibility, and you've got the ability of scale. And all of this is playing out in very, very long-term contracts. The IT forecast by Gartner focus on how IT services in April of 2023 are probably growing at about 9%. Now, 9% may not look like much, but in a global standpoint of view, 9% is a very, very big growth comparing to the rest of the world, wherein you've got significant degrowth across several sectors. What this also means for investors as investors in these companies is that you get twin benefits. You get the benefit of the upswing. You also get a high degree of margin of safety because, again, many of these contracts are long term in nature, so they have very low volatility in terms of revenue projections, right? So that also reflects in their stock price movement. Let's take examples of the great financial crisis in 2008 2009. You saw the Nifty IT drawdown at 52%. Yes, that's a big number, but compare that to the market. That was a 59% drop in the market, and the resultant recovery thereafter is 153%. That's almost double of the Nifty 50. Look at 2013, the taper tantrum, similar situation. Look at COVID, again similar situation. We are now at this cusp again, wherein you have seen a bad 12, 18 months of performance in terms of the Nifty IT, which meant that a lot of the fraud that was built into the system has now come out. And incrementally, we believe that the longer term potential or the longer term runway is more of a tailwind rather than a headwind. We've done a series of comparisons in our presentations. I'm going to let all of you all look at it. It's available on our website. It's also available on our recently revamped mobile app. And what you need to focus on is that you are getting a highly diversified portfolio of companies which cater to different business streams. You're getting it at a reasonable valuation, both from a domestic standpoint and from a global standpoint. Consider this: the Nasdaq today accounts for about 50% of the revenue. The IT component accounts for about 50% of Nasdaq's revenue, and a lot of that has got linkages to Indian IT as well. So it's very imperative to say, and a lot of people I've been speaking to of late have been saying Nasdaq is cool, Indian IT is boring. Not anymore. Nasdaq offers or Nasdaq-oriented companies offer certain USPs. Indian IT companies offer USPs. So if you are planning to play this in tandem, have a blend of both portfolios. We've got an excellent product called the Axis Nasdaq 100 Fund of Fund, which invests in an ETF that replicates the Nasdaq 100. You've also got the Nifty IT Index Fund, which gives you exposure. So a twin exposure using two products can be a very, very beneficial strategy for your IT allocation. So in summary, the market view remains very bullish. We've got a very strong macro outlook for the Indian IT sector. You've got consistent long-term demand, and you've got valuations that are very, very comfortable at this point in time. So that's my opening remarks. Sid, if you want to come in here and maybe throw open the show for comments, that'll be great. Comments and questions.
Sure, Shane. So I think we have a healthy turnout in terms of questions.
Yeah.
Let's go through a couple of them. Before we actually get into questions, one question for you: how much of this PPT was made by ChatGPT?
Yeah, the data. There are some inferences of data that we've used. We've also been experimenting with ChatGPT at the product team. So very small but healthy contributions there. Yeah,
Yeah. So
yeah,
I think, Shane, what we probably need to also tell the audience is that maybe these advances in terms of AI, in terms of ChatGPT, etc., are here to assist us rather than take over. It's
yeah,
not like the rise of the machines, right? So would you want
yeah.
to spend a minute on probably helping the audience here to understand as to how man through times has made certain discoveries which has helped improve the quality of life. So we
Yes.
discovered fire, we invented the wheel, right? So this may be a wheel 3.0 for that matter. What are
Yeah.
your views on that?
Yeah, but no, I completely agree. I mean, yes, there are fears that, with every new technological innovation, there are job losses, a sense of obsolescence. But what we have to understand, Sid, is that in ever since 2000, and there is this theory called Moore's law, which says that which says that with every new advancement in technology or in inventions, the speed at which the world evolves is increasingly coming down. So you had, when personal computers came in, it took about 60 years for it to completely assimilate into our lives.
Yeah,
Fast forward to today, you've got ChatGPT, which probably got 100 million customers
yeah,
in a couple of days, right? I mean, so that degree of disruption, that degree of innovation is here to stay. And rather than being belligerent, and rather than becoming an obstacle, we
yeah.
should we should evolve with the times.
Yeah, cool. Thanks for that. So, I think I'm looking at this trend repeat in a couple of questions.
Yeah,
The audience is asking that given that the Nifty IT index consists of the top 10 IT companies in India,
yeah,
not many of these companies are working on AI as a primary solution.
yeah,
What are your views on that? So, given that these companies are primarily working on export solutions
yeah,
and service-oriented organizations, where do you think IT will help them grow, or other? Is
yeah.
that the next disruption?
Yeah, yeah. No, so it's a very fair point to say that. See, most of Indian IT companies, or largely the Indian IT service sector, is more a B2B business. Very seldom do you see Indian IT companies interact directly with customers, domestic customers. The fact of the matter is that they're still not innovators. The innovators are still your Nasdaq 100 companies, your Apples of the world, your Microsofts of the world. So they create the solutions for you. But what Indian IT companies have historically been able to do, successfully invest in a lot of these technologies in capabilities, and they are able to bundle out or create solutions out of a lot of these services. So, for example, the bank that you bank with probably is using some form of AI, some form of machine learning that was developed by or pioneered by the West. But it was your Indian IT company that actually created the structure around it, the product and the solution around it, that enables your bank to service you in the way you experience it today. So we should not lose sight of that. And more than creating the solution itself, it is the implementation that takes the cake when it comes to Indian IT companies. And like I mentioned to you, Indian IT companies are fantastic executioners. It is proven by customers. It is proven beyond a doubt that Indian IT companies can execute very, very large, robust scale.
Yeah, I think that that's pretty fair, Shane, because we did see a lot happening a couple of years back on IoT, on Web3, etc., on
Yeah,
blockchain.
Yeah.
And to a certain extent, all of those themes have been muted. But what we don't realize is that these themes are actually ingrained into how the
Yeah.
Indian
Yeah.
IT sector services its customers. Right? What are
Yeah.
your
Yeah.
views on that?
No, so I mean, let me give you a live example. A lot of the Indian banks today are experimenting with blockchain, not in the way that you and I think in terms of virtual currencies and all of that. What they're looking at is how to simplify trade, how to simplify complex documentation, how to like for example today a lot of people are filing tax returns. How is the Indian government able to do 360-degree profiling of this? It is all tech enabled. So when you transact on your credit card or you transact using your UPI, all of that data is being fed into this giant set of servers, giant set of AI tools and machine learning tools that are assimilating a lot of this data for the Indian government to crack down on illicit wealth and all of that, but also to help consumers like you and I to get a better pulse of what are spending patterns, how do we use our money, how do we interact with each other in terms of from an economic standpoint. All of that has been made possible by new age solutions like blockchain. Coming back to my example on trade, it used to typically take you about 20 to 30 days with the customs department to kind of get all your documents in order, get your letter of credits, then ship your goods overseas, again deal with global customs, so on and so forth. With blockchain, now you're able to crunch that down very, very significantly. Our own bank, for example, is experimenting with a lot of these facilities. Um, so, so all of that is there, but it's all in the background, and whether we like it or not, it is adding significant value to us both as customers as well as to the IT companies themselves in terms of profitability.
Yeah, thanks, Shane. I think they're great views because I think many of us are nowadays. There are stats that India has, I think, the highest number of smartphone users and the
Yeah,
most number of people on the internet in the world.
yeah,
So I
yeah.
think we're all using these services today, but probably unaware.
Yes,
So
yes.
Shane, there's a question
So
that
that's a great question. That's
sorry,
a great point, Sid. So
yeah,
even the 5G implementation, yes, there was hardware, but there was technology.
yeah,
Who implemented those technologies? It is probably your Indian IT companies that have had some role to play in one way or the other, right? And that's all hidden.
true, true. So
Yeah.
Shane, we do understand that the government does have a large part to play in how the IT sector has grown. What are your views on that? How is the government enabling the growth of IT in India?
Yeah,
and
yeah.
and
No, so
essentially helping
yeah,
us helping us move away from, as I mentioned in my opening remarks, we used to be the world's BPO,
yeah,
but now we're becoming a leader in cutting edge technology. What do you think
yeah,
has
yeah.
enabled that?
Yeah. So two structural changes that have happened over the last 10, 12 years or so. So first is something called the Jam Trinity. Now, the Indian government embarked on this ambitious project called Aadhaar way back when, right? I mean, I remember about 10, 15 years ago, when you had the first set of Aadhaar enrollments that happened. People took their PAN cards and people took their election cards and all of that, and then
Yeah,
got all of that, and then got this unique looking UIDAI receipt of sorts. What that created is that gave every individual an identity. From an individual citizen point of view, you had a clear identity from the government of India for the first time, and that is at scale. Consider this: to get an identity for 1.4 billion people has never been experienced in the world before. On top of that, the government then initiated credit, right? Uh, you had various central government schemes which first enabled people to open bank accounts and then to give them credit. And on top of that, all of your subsidies and direct benefit transfers that were taking place was technologically enabled to ensure that you had minimum leakage and you were meeting all of your goals as an aspirational populace and as an aspirational government. That made life very, very simple. Then on top of that, you linked everything to the mobile, right? So you have a beautiful jam trinity that is currently enabling a lot of this. Today, for example, we are doing GST. What is GST? GST is the same tax collection that we used to do earlier, but today GST is on a very broad scale a technological innovation, wherein the government is able to seamlessly collect taxes online, validating everything online, faceless, and causing minimum grievances to people, right? So that is what has enabled IT from a citizen perspective.
Yeah.
And to your point on BPOs and how Indian IT companies have kind of played a very vital role in that. In the early 2000s, what was the problem? The Y2K bug, right? I mean, what was the Y2K bug? It was a very simple thing because when the computer or when the World Wide Web was invented, the problem was that it could not go beyond 9999.
19.
When
Yeah.
you go to zero, right? I mean, that is what the logic was. So Indian IT companies went and rewrote billions and billions of codes. Fast forward to today, is that needed? No. Indian IT companies have slowly evolved. They went from BPOs to KPOs, and from KPOs now they've gone into advanced machine learning solutions, advanced project implementation solutions, turnkey projects, and a host of other enablement solutions that have really added significant value. Now, the same effort that it took a BPO executive to earn that 50,000 rupees worth of revenue, fast forward to today, forget adjust for inflation and all of that. That same guy is able to earn maybe 50 lakhs, 5 crore worth of revenue with that same time because he's just gone up the value chain, right? So that is the exponential growth that Indian IT has faced, and that is reflected in a lot of these companies' stock prices doing very well.
Yeah. So actually, Shane, that brings me to another question here. We've seen through the COVID impact, through when we were all locked up at home, and what the world has changed, and in fact, the world has changed. Uh, in today's day and age, it's a new world.
Yeah,
We've seen the likes of Zoom, the stock prices go through the roof. At one point in
yeah,
time, it had a market valuation that no one could have ever dreamt of.
yeah,
But then
yeah,
it started tapering off as the world got back to normal.
yeah,
Where do you think we stand as a service oriented economy, given that
yeah,
we are past COVID, but we
yeah,
see there is still a Ukraine war going on, which is still affecting. You still have a chip shortage globally, right?
yeah, yeah.
Where do we stand? How do we stack up there?
Sid, honestly, so when you look at Zoom, yeah, and we're doing this via Zoom, so I mean, credence to that. But if you look at it in terms, I don't know about the company too much beyond the software that we use, but it is to my mind a one-trick pony, and there was this huge euphoria about video conferencing and how Zoom really did well during the COVID period of time, but its inability to innovate at a scale that was desired by investors has probably led to its downfall. The company's still around, right? I mean, it's not closed down.
Yeah.
So Indian IT, on the other hand, is more of a sustainable service provider. Now, like my opening, like comments I made in the opening remarks, these are 8, 10, 15-year projects, and as these companies tend to keep innovating, keep investing in a lot of tools and solutions, they are trying to stay relevant, and it is very critical for Indian IT to stay relevant. So the move from BPO to KPO to service is all about staying relevant, and we've done that so far. It's 3 or 4 cycles so far, and that's where we continue to remain very positive on this space.
All right. So I think we also see a couple of questions pertaining to data security, privacy.
Yeah,
We are aware on the digital side, what's happening is you have the GDPR conventions that is coming in. So data security is now more relevant than ever before.
yeah,
Uh, so we have to ensure that we maintain highest quality standards in terms of data security.
yeah,
How is the Indian IT sector doing that? And are you aware of any frameworks that are in public domain? So like we have an ESG framework
yeah,
that
yeah.
we at Axis Mutual Fund abide by. Are there similar frameworks that are available in public domain and that we know are followed?
Yeah, I'm no expert on this, but from what I read last, I think we do have a new data privacy bill that is in the works or has come out, And lot of this is being fronted by the government. So we must appreciate that the government of India has taken a big step forward in kind of ensuring there are fair rules around data, the fair rules around telecommunications and all of this. And to that point, we've got a very robust IT Act, which has seen several amendments, keeping in time with the times, and that bodes well for us as an economy which is tech enabled.
Fair enough.
Yeah,
I think, say, I'm looking at a couple of questions, and most customers are asking, is this the right product to invest via an SIP or lump sum?
yeah, yeah.
So I saw in one of your slides we had mentioned the SIP performance of this index. Can we shed some light on how this index has performed, and maybe could you pick your brain on understanding how an investment would have fared over the last, say, decade or so?
Yeah. Let me just reshare my screen for the benefit of everybody. So, is it visible?
Yes.
Yeah. Okay. So, so see, let's look at the chart on the right first. Okay. So, sectorally, the Indian IT space has been a standout winner for investors over the last 10 odd years or so. This the numbers also include dividends, because Indian IT companies pay a lot of dividends. So dividend yield is about 2%, 2.5% or so, as compared to, say, the Nifty 50, which gives about 1% dividend yield. Also, what we must understand and appreciate is that any sector, including IT, works in phases. Those phases are typically periods of pain. So you look at the performance in 9, 10, and 11. It was preluded by the Great Financial Crisis. 2013 was a great year again. It was preluded by the pigs crisis in Europe. You look at 2015, it was preluded by taper tantrum. You look at 2018, it was a domestic problem, when we had a whole host of issues around our economy, and weakness in certain pockets.
Yeah,
Then
and we were just getting out of demonetization as well, so
yeah,
that's
correct,
when
correct.
we were
I mean,
just getting
yeah,
back.
I
Yeah.
didn't, it was not coming to me. Sorry, but yeah. So in 2020 again, great period, COVID. So periods of pain have historically led to future potential for the IT sector, and that is more fundamentally driven rather than a valuation game. Today, you've got a beautiful scenario wherein, including including an opportunity, a fundamental opportunity, you've got valuation that is cheap. And for investors who've stuck through this, you spoke about SIP investing. They've also made a great deal of money. You look at a 10 year performance. You've got the Nifty IT delivering about 16.5%, 7 years 18%. So I mean, that's very interesting, from a SIP investing point of view. But the caveat here is that, please mind you, that this is a sectoral fund. Please do not put all your eggs in one basket. The whole aspect about portfolio investing is you diversify away any concentration risks. The Nifty IT is a concentrated portfolio of 10 companies. And within that, the top two names, which is TCS and Infosys, account for about 50% of the index. So what we must recommend to investors is that, if you are feeling that IT is an opportunity in your existing portfolio and you want to top that off, the Axis Nifty IT Index Fund is a great a solution for you to do that. Also, it is very simplistic in its running. It will replicate the entire basket. There is no fund manager intervention here, so you can come as you go, and you can participate as per your asset allocation. The entire degree of transparency is what makes a passive product unique and attractive.
Yeah, and see, I think what also helps a passive product is the fact that the expense ratio is relatively low. as compared to an active fund. So that may be
Relatively yes, but the focus should be that it is a market participation product. There is no degree of alpha that you should expect from a product like this. It is market participation.
fair. All right. So,
Yeah.
Shane, I think there was another couple of interesting questions. So there's this one gentleman. I won't name anyone. We take data
Okay.
privacy very seriously.
Yeah.
So this gentleman asked if I have 100,000 rupees to invest, what percentage of that would you suggest this individual to invest in this NFO? Again, sir, sorry, we don't know your complete details. So, Shane,
Yeah.
if you can help with a
Yeah.
top, yeah.
So let me give you the broad thumb of rule that I tend to follow is uh, about 50 to 60% of your portfolio will be in core funds. So core funds could be a diversified large cap, a flexi cap, or a multi cap solution. Take your pick. You've got about 25 to 30% that should normally go into more safer assets, secure assets. So that could be like a balanced fund or a debt fund, depends on your risk profile. And the residual amount is something that you could play with depending on your risk profile. So if this is where that market participation comes in. So if you believe that IT is the next big thing or a great story, go for it. If you think a thematic idea is something that you would want to do, that's another solution that you could look at. If you're looking at products that are shorter term, high gestational, sorry, not high gestational, high churn type of portfolios, like say a business cycle theme or like a quantitative theme, that is another option for you to consider. So I mean, like Sid said, I don't know the client. I don't understand his portfolio at this point, but this is the general rule of thumb. So, fifth, depending on what is your risk profile, anywhere between 15 to 30% can be in thematic or sectoral opportunities. Again, please do consult financial advisors if you are unable to manage your own finances. But yeah, this is the general rule of thumb.
Right. So, Shane, an extension to that question. This one customer asks us, what is the benefit of buying an index fund and not individual stocks?
Yeah. So for the beauty of an index fund is that it gives you much needed diversification at a very granular level. Today, if you were to buy the basket of Nifty IT, you would need a minimum of about 7.5 lakhs to replicate the entire basket. For those investors who are more savvy in terms of stock selection is a great approach for those, but the risks are twofold. It's a double-edged sword. What an index fund is able to do for you is it is able to completely well round your sectoral exposure. The Nifty IT, for example, gives you 10 companies. So you've got your large caps like your TCS or Infosys. You've got your mid caps that are like Coforge or an NIIT or a Persistent rather. So you've got an eclectic mix, also from a regional perspective or a geographical perspective. You've got both domestic serving companies. You've got global serving companies as well. You've got companies that cater to government businesses. You've got companies that cater to banks. You've got companies that cater to healthcare providers. The whole range. So it's a very well diversified portfolio of sectoral stocks. So for those investors who believe in building asset portfolios, long-term portfolios, an index fund could be a much better approach given the granularity, given the inherent ability of them to manage these type of risks for you.
Thank you, Shane. Thanks for getting into the detail, because I think it's also another important factor is that when it comes to picking an index fund, you just have the fund manager or rather the investment team do your research for you, right? So
Yeah,
it can
yeah.
be like fill it, short it, forget it, right? It's
Yeah,
on
yeah, correct,
autopilot.
correct,
Yeah.
correct, correct. So here the role of the fund manager is a little less. It's more the index provider. But yes, index providers have got a team of researchers that also monitors a lot of these companies. So yeah, so I mean, leave it to professionals to kind of your objective should be just to participate in the markets. If you want to participate in an IT sector, an index fund is a great option.
Yeah. So, Shiv, I have here a couple of questions. I think these are early investors,
Yeah,
and it's a little basic question. And if you may go into a little detail here,
yeah,
why do index funds usually have a lower expense ratio? What role does a expense ratio play in an index fund? How does it impact users? How does it impact an investor's return?
yeah.
Would you be able
Okay.
to spend a couple of minutes and
Yeah,
just
yeah.
help? Yeah, thank
Sure,
you.
sure. So let's look at the workings of a mutual fund, right? So you've got a basket of securities that in this case you are trying to replicate. So you've got the Nifty IT index, which is created by NSE, and NSE maintains this on a day in and day out basis. What we as primary manufacturers and mutual funds do is that we subscribe to this data and we replicate to the best of our ability. So let's say, for example, I get say 10 crore in this fund. I will replicate the Nifty IT almost to the last decimal in the 10 stocks there is. There is, of course, a charge to this. The charges can vary depending on what are the different expenses that go into running and maintaining a fund like this, and that gets deducted from the daily NAV. So you as an investor don't get separately charged, a 15 basis or 20 basis or 25 basis. It automatically gets deducted on a daily basis, and resulting what happens is that if say for example an index gives you 10%, your index fund would replicate it very very closely, so to give you that 9.9 or near 10% return, less of expenses. That is it. It's a very very simple concept, and hence one more element. I'm at the risk of repetition. This fund is not aimed at creating alpha. So you should not expect that this fund will go and beat the Nifty IT index, because that's not what the mandate is. It could be some certain other sectors or broad market sectors. That depends on how the IT sector does vis-a-vis other indices. But what early investors should look at is that I I am coming into this fund with my 1,000 rupees or 5,000 rupees or whatever that amount is to participate in the IT story that is in there. And with the 10 rupee NAV that I have, I'm able to get very very granular. So today, if I want say 1,010 rupees, I'm able to do that with my SIP, right? If in my the previous question that said you asked me to replicate the Nifty IT, for example, you would need roughly
Hmm.
about 7.5 lakhs or so. If you don't have that kind of capital, an IT index achieves the same objective less the capital.
Yeah,
Yeah.
fair share. Yeah. I think another question, just as an extension to that, is what is the current trending PE of the Nifty IT at this point?
Yeah.
And if we have a view on the historic PEs, I think this investor is probably an active trader. So is
Yeah, yeah. So the current PE is somewhere around 25. Markets have moved fairly rapidly over the last week or so, so that number may be a little obsolete by now. But historically, you've had a period of you've had the last 10 years wherein the Nifty IT has hovered between. Sorry, just let me look at my chart. You've seen the Nifty IT move oscillate between about 15 or 12, actually 12 to about 25 to about 45. So you had a very wide band in which the Nifty IT has done well. Um at its peak, I think in November of 2021, you had the Nifty PE trading significantly over two standard deviations above its average. So from there, it has normalized quite a bit. So we believe that the valuation is fairly compelling, and it is at the bottom end of that range. And hence, from a valuation perspective, it makes a lot of sense to participate in that story.
So, Shane, just adding on to that, we've seen that the markets have been at an all-time high. Nifty is, I think it's congratulations to
It,
everyone here. We're all
it's
up,
touched a fresh high today as well. Yeah.
yeah. So, Shane, do you think this is the right time for someone to get into this index, given the markets are at their peak? What are your views there?
Yeah, so the actual trough of the Nifty IT was somewhere around end March 23, and since then the Nifty IT has bounced back about 10% or so. Now, with that being said, the broader market view is very constructive, given that there has been a significant return of animal spirits back into the Indian markets after a fairly lackluster year of sorts. So what's happened is that earnings have flown through very well. There is a global tailwind for India, given where the geopolitical stance is, and you also got foreign investors coming back in droves in a very big manner. Now, banking and IT are two sectors that FIs have favored historically because A, they are most liquid, and they are the largest sector of the Indian economy itself. So, and as we speak, FIs on an aggregate basis are underweight India. So that going to equal weight itself is a very significant significant move. Just in May and June, for example, they've added in excess of about 50-60,000 crore of net assets. So that very large numbers that are floating around in the markets, and because of that, you've got animal spirits coming back. Uh, to your point on life highs should not be your barometer. It should be where the value is. Value is in IT, for example. It's very constructive given earnings potential, and to that extent, we are very bullish on the entire Indian capital markets at this point.
All right. So, Shane, couple of odd questions here and there.
Yeah,
Let's see if we can get you to answer them.
yeah.
So, a particular customer asked us, what in your view, or rather, why do you think the stock price for Netflix has taken a dip? So, we've seen Netflix had a no password sharing policy,
Yeah.
uh, and we've seen them struggle a bit. But what do you think is here? But I think this actually boils down to, or rather, plays into a larger question. Globally, we've seen a lot of tech first companies or IT based companies have a lot of retrenchment, whereas India has been a little more stable in that sense.
Yeah.
What do you think has protected the Indian IT sector against this surge in the West?
Yeah, so it comes down to the business model itself. So, like I mentioned, most Nasdaq companies are solution-driven businesses or product businesses. So, Netflix, for example, is your streaming business. Uh, it is a one-trick pony, right? If it wasn't for streaming, what else do you think that Netflix does, right? A very tough question for you to answer. What does an Indian IT company do? An Indian IT company provides implementation services, project execution services, turnkey projects, right? All of that. So by virtue, Indian IT companies are more stable. Today, if Sid was working for an Infosys, he would work on client X. And if Infosys loses client X, then he would probably either get on to move to the bench, or he would move to another project, right? So from that perspective, given that Indian IT companies continue to have live existing very large contracts, and there is always a dearth of good talent. Um, you know, Indian IT companies do not face that challenge of high degree of retrenchment. There is attrition for a whole other reason, but retrenchment is rather rare in this from a purely business model standpoint.
So, Shay, I think we'll probably just take the last couple of questions.
Yeah,
That being said, the audience here today, please feel free to keep punching your questions, uh, and do visit our website. There is a button that will take you to the product page. You can read all about the fund there. So Shane, the last couple of questions.
yeah,
There's one question that talks about how does the Nifty IT index aim to mitigate risk of volatility associated to the IT sector? I think we've already covered this in a
yeah,
different
yeah.
form. But if
Yeah.
you could probably reiterate it, just
Yeah.
because it's been
So,
repeated.
so,
Yeah.
so the objective of the Nifty IT index fund is just to replicate uh, the Nifty IT. There is no active management. Again, reiterating, there's no active management. So the throes of volatility, if they come in the sector, it is not the job of the Nifty IT index fund to manage that volatility. With that being said, at a product level, Axis Mutual Fund firmly believes that when we launch these products, it is very imperative to consider this kind of volatility. So that is why you would see that we've got a very niche basket of product offerings, factoring in the possible risks of downside. The IT space as a whole historically has had lower drawdowns than frontline benchmarks like say the Nifty 50 or the Nifty 100, which gives us that confidence that there is an inherent margin of safety in sectors like the IT over certain other sectors, and that should help mitigate longer term damages to portfolios. With that being said, again, this is a market participation product, and there is market risk that is assigned to this. Uh, so investors would do well, prudently well, if they use the product for its intended purposes rather than to game the system and try and make superfluous money out of it. Yeah.
All right. Fair. Sushil, I think final question.
Yeah.
We have a customer who asks us, "How do I invest in this fund?" I think you've done a very good job at convincing him.
Yeah.
So
So you've got multiple options. You can participate in the NFO. You can either contact your financial distributor. Or you can come directly to us. We've got the entire call center team that's available to you. You can walk into one of our branches. You can even use the mobile app. We've recently revamped our mobile app, right, Sid? So that can get you through an investment in less than a minute or so. That's what Sid tells me. I think you've got a range of options, but please come as an informed investor and enjoy the investing journey. Uh, that's all I have to say to that question. Sid?
yeah, thanks, Shane.
Yeah.
I think we won't hold the audience. I think it's a Friday evening.
Yeah, yeah, and
We'll
happy
yield.
Friday to everyone. Thank you for listening in.
Yeah.
Yeah.
So on that note, thank you, ladies and gentlemen, for everyone who turned out today in healthy numbers. We appreciate your support. We will be back soon with another episode in this series. Thank you for your continued support. Have a happy weekend.
Bye bye, everyone.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.